So Cisco Systems just reported earnings and looks to be like a good response. Intraday was up right around 1.5%. After hours, after it reported, up an additional 4%. Call it right around 4.5%. So about 6% on the day. And if you guys are new to the channel, Cisco Systems to me was definitely very interesting in the mid 40s. It is one of my larger positions. With the acquisition of Splunk and multiple other cybersecurity companies, Cisco has been quietly building a nice portfolio out of their business, and revenues were declining with this company. So this is definitely a turnaround story. So we're going to get into the earnings. We're going to talk about the pros, the cons. And with those earnings, my account hit another high at $32,622. As you can see here, Cisco System makes up roughly 16% of my portfolio after this earnings, with CVS making up 17% of my portfolio. I don't ever recommend going that overweight on any stock. I recommend just dollar cost averaging into a broadly diversified index. But these are two companies that I specifically think are tremendously undervalued, that have a lot of opportunity. And so that's why they make up a vast majority of my portfolio. On this channel, we take our emotions out of the equation, use fundamental analysis to see if there's any underlying deep value opportunities within the market that maybe the market's overlooking. And Cisco Systems, to me, definitely fit in that definition, and we'll get into why that is. As you can see here, without getting into the numbers that were reported, I basically had them between a $42 stock and a $50 stock. So mainly closer to that low 40s to me, was a tremendous buying opportunity. So revenues were down 13% year over year. Obviously, the market's pricing this in, as this was a stock that was in the high 50s, low 60s, now trading around in the mid 40s. So this is not what the market's excited about. GAAP EPS decreased 41% year over year, which was negative impact of 9 cents for the acquisition of Splunk. So a few things are happening here. Number one is product sales are obviously definitely a headwind for the company right now, but I believe product sales will start picking up with the demand of build out for AI capabilities, and I think Cisco can benefit from this. But where the company is actually getting interesting is the fact that services are now starting to become a bigger part of their revenue. When we're looking at these earnings kind of being obviously not anything impressive, we have to kind of read through the numbers here of the positivity. Number one, forward guidance of revenues coming in stronger than anticipated. EPS came in stronger than everybody thought. They thought they were going to do 82 cents. They did 88 cents. But here's where I get excited about Cisco, and this is where I need them to execute if I'm going to stay involved in the stock. Number one is services have to start becoming a bigger part of their revenue, and that is definitely happening. Along with services becoming a bigger part of their revenue, we're going to see total cost of sales coming down here. And just looking quarter over quarter, we can see. So I like to see that because that's going to be margin expansion. That's going to be down the road. That'll be stronger for cash flows. They obviously still have to execute here, but we can see that they're guiding for 53.6 to 53.8 billion. So they're actually executing to exactly what I thought they can do. 53.7 billion I have on here with 6% revenue growth going down to 5% revenue growth. And this is me building out the fact that the service aspects are going to be growing continually, and I also think that there is a tailwind for AI capability, AI build out for Cisco to really capture a lot of that as well. So the products I also think are going to stabilize. So with the growth of services, and I think we're going to see products tick up and stabilize, I think that this is very achievable revenue growth for Cisco right now. So in my opinion, I think anything below $45 a share is still a buy for Cisco Systems with an ideal price target of between $40 and $41. The nice thing is they gave us GAAP and non-GAAP EPS. So it looks like from a GAAP standpoint, they're going to do right around $2.50, and from a non-GAAP, $3.70. So we can get adjusted and non-adjusted earnings here. So the stock's trading right around, call it $50 a share, divide that by the 3.7. You're looking at a company trading at 13 times forward earnings. And then from a GAAP standpoint, once again, trading around $50 divided by 2.5, 20 times on a GAAP basis. So overall, I think valuation's in line. I think it could trade probably for a little bit more. I think anything above $55 a share starts getting expensive in the stock. But I also believe that there is margin expansion taking place within this company, especially if products can stabilize here. So if we look at the 9 months trailing, they did right around $1.6 billion less in revenue. But when we bring it down to gross margins are actually better in the trailing month. So we're starting to see efficiencies here pick up. And that's where I think the value is really being unlocked. And that's where I told a lot of people, this is where the value is for Cisco. It's not going to be tremendous top line growth. It's going to be margin expansion, multiple expansion, because now they're dealing with the cybersecurity aspect of things. And if you look at the multiples that cybersecurity is trading at, if Cisco gets any sort of multiple expansion here, this is a stock that can really get expensive very, very quick. And it seemed reasonably priced at the time in the mid 40s. And so that was the logic behind building it out to be one of my larger positions. So at this point in time, I think it's doing exactly what it should be doing. I'm completely fine with it trading between $50 and $55 a share, compounding it with over 3% dividend yield. From where I'm standing, that's about a 15% gain plus a 3% dividend yield, which equates to right around an 18% annual rate of return. And if we can compound that to next year and they can keep growing that revenue on the track that they're doing it, I think Cisco's doing everything right. And management's executing to the likability. Management's executing to my standards. They're basically doing exactly what I thought they would be doing. And so I'm really happy with the earnings. They didn't blow it out of the water, but I also think they didn't kitchen sink it like a CVS or Pfizer. And overall, I would say it's just doing exactly what I thought they were doing. They're not killing it. They're not failing. They're doing exactly what I projected. And so that's the nice thing about fundamental analysis. Sometimes it can work out in your favor. As always, guys, really appreciate your time, and we will see you in the next one.